Alrighty, so in this video, we're going to be doing an introduction into my understanding of the quarterly theory, how that actually impacts price, how you can use this to potentially get a better gauge on what price is doing and what cycle the price is in, but also using this and your understanding of the power of three to take high probability trades alongside all the other confluences that you have, right? So we know that the market is an algorithm. It's not random. As ICT says, the price is booked based on an algorithm, and time is an important factor, right? There's different cycles in the year, there's different cycles in the week, there's different cycles in the day, and there's different cycles within the session. So the way we do this for quarterly theory, and it applies to all sessions, but we're going to start from the London session and then move our way forward. So what I'm going to do, I'm going to draw a vertical line. The first vertical line that I want to draw is actually at 12 o'clock. Now, 12 o'clock, as you know, is regarded to as midnight open price, right? Which is like true open. And you might have seen this in ICT's video. So that there represents midnight open. And what I'm going to do as well is actually represent the opening of midnight open candle just with a horizontal line. So we're going to open price here. And I might actually change that to like a horizontal ray. So this is midnight opening price, right? We came down and then we closed right here. So we're going to draw that across and we're going to label this as midnight opening price. So when I'm trading London session, midnight opening price is an important price to be aware of because often if we're looking for power of three setups, anything along that nature, along those lines, we use that price as a reference point. So I'm just going to change this. We'll put this on the left here just so you can see that's the midnight opening price, right? So midnight opening price is marked out. We've marked out the midnight opening price as well, that candle with a vertical line. And what we're going to mark out now is every single 90-minute period, right? So we're going to break the session or London session into 90-minute periods. And then we're also going to break up the New York session into 90-minute periods and see how the price behaves at each of those zones. And this is technically the quarterly theory in a very simplified version, right? So what we're going to do, we'll just move this into the center, a bit easier to see. That's the first quarter. Now we're going to put a line at 1:30. So 12 o'clock, 1:30, that candle there. Then we're going to put another line at 3, which rests about here. And then we're going to put another line at 4:30, right? So these are the first quarters and one more at 6 o'clock that we're going to keep in mind. And we're going to have a look at what price is doing in each of those quarters. Now, this is London session. I want to point your attention to something. Does everyone see that in this first quarter, you actually have accumulation? Look at price in this first quarter. You have all this accumulation in this first quarter. In the second quarter, you've got some kind of move down. But if you look at it in hindsight, that move down is the manipulation phase because look at what comes next. Look at what comes next. So we've got the accumulation phase here. We've got the manipulation phase here to the downside. And then we've got a distribution phase that follows. So what the quarter theory is, or the quarterly theory, is that each quarter should present something different, and it all starts based on what the first quarter shows. So if there's accumulation in the first quarter, you can expect a bigger move in the second. If there's not accumulation in the first quarter, say there's actually a move in the first quarter, then you can expect accumulation in the second quarter. So you can use this to kind of base what the chart should show and if it's going to be a good trading session or not based on your analysis. So we're at midnight open. We're accumulating at midnight open. You can see here, this is when London open occurs, right at 2 o'clock. London open happens, we push back down. Now you might go, well, what are we pushing back down into? Yes, there's this fair value gap here, but have a look on the 15-minute time frame, and we'll leave these quarters there. You've got accumulation here, manipulation to the downside. See these two candles here? These represent an order block. And what I'm going to do, I'm just going to draw that in this color, and I'll just decrease that opacity. So notice we've got this order block here. That's really important. And all I've done, I've marked the bodies. ICT uses the bodies. So I've marked both bodies, top and bottom. And then what I'm going to do is I'm going to grab my Fibonacci and I'm going to try and look for the 50% level on these bodies. So let's have a bit of a look here. That there's your consequent encroachment, or median threshold is what ICT calls it. And you can see this manipulation move. So we manipulated to the downside in the second quarter. We came to roughly consequent encroachment or median threshold, and then we pushed back up. So even without knowing the quarterly theory, you might see this straight away as the power of three. accumulation, manipulation to take out sell side that rests below these swing lows. So we take out that sell side and then we tap into a higher time frame PD array. In this case, it's a order block or a bullish order block. So that's how I see it. But then when you add these quarters on, you can see how we move in phases. So accumulation here, manipulation, and then distribution, right? Distribution, where are we distributing to? Well, there's these highs here, right? And that's an Asian session high. So we know there's liquidity there. And if you're trading London session, you know that Asian session highs and Asian session lows hold a lot of liquidity. So this is your buy side liquidity target that you can see above, right? We've already taken out sell side and tapped into this order block, and now we take out buy side. And have a look what happens in the last quarter. So if we separate this into segments, this here being quarter one, what happens in quarter one? We get accumulation. What happens in quarter two? We get manipulation. So we can see we get manipulation to the downside. Quarter three, we get distribution. Distribution to where? To take out buy side liquidity from Asian session highs. And the fourth quarter is either going to be one or two things. It's going to be a continuation of this distribution, or it's going to reverse from this distribution. So this is quarter four. Does quarter four continue what's in quarter three? Well, yes. You can see we just continue to the upside for the rest of that quarter. So essentially, the power of three links very closely to the quarterly theory. And for example, right, if we now zoom in on a lower time frame, and let's say you wanted to trade Silver Bullet, right? So let's just go back to the 5-minute time frame. You want to trade Silver Bullet. So Silver Bullet is at 3 o'clock open. Now, we're looking at the quarters. We know accumulations happen. We know manipulations happen. Distribution now is occurring by the looks of this. And notice now, there's this accumulation period, right? We kind of hover around that area, and what we're actually sitting in is this bullish fair value gap. So this bullish fair value gap here, right, and we might just decrease that so we can see it a bit. This bullish fair value gap here, notice, right, the price returns to that during Silver Bullet hour. That's all Silver Bullet, right? Even here, that's Silver Bullet. So we return to this bullish fair value gap here. So essentially, this could be seen as multiple things, but using the quarterly theory, you can kind of see what stage you're in, which if you wanted to go for shorts, for example, if you wanted to short the price right here, by looking at these quarters and looking at the power of three and what's happened before, you can avoid taking shorts because the idea is that you want to take out this buy side liquidity. And even once you've taken out that buy side, there's higher targets that you might want to reach, right? So that's how you apply the 4 quarters. And if you're going to put labels on these, that there is accumulation. The second quarter is manipulation to the downside. The third quarter is distribution. So that there is the power of 3, accumulation, manipulation, distribution. And the fourth quarter is called X. And X can either be a continuation of this distribution, which we see here, or it can be a reversal, right? So that's the first 4 quarters, right? Starting from London session. Now let's continue on for the next couple quarters and let's see what actually happens. And we've labeled it at the top here too, but let's just get rid of that for now. And we'll actually see what happens in the next 4 quarters. So this quarter ends at 6. Let's draw another vertical line at 7:30. So where's 7:30? Right there. Let's draw another one at 9 o'clock. And yesterday was really, really nice price delivery for this. Let's draw one at 10:30. And then let's draw one at 12 o'clock. Cool. Now, we've got accumulation, manipulation, distribution here, and then a continuation of that distribution over here, right? So that's the first 4 that we see, right? So that's what we're looking at here. Then let's move to this next quarter, and it starts again. So the process starts again. What do we see in this first quarter? Accumulation. You can see price, even though it's moving up a little bit, it's only moving in a narrow range. It's not drastically moving to the upside. So right there, I'd class that as our accumulation phase. If we accumulate in the first quarter, we expect a big move in the second, which we do get. And you can see that here. So we're going to label that now in green because we're moving up. So we get our manipulation phase here. So if you're looking at this, and I'm just going to get rid of all these other annotations because there's a bit too much on the chart at the moment. If you're looking at this and you wanted to trade at another time point and you're just using liquidity as targets in the quarterly theory, you can see how this all looks. And now what we're missing here, we're missing our third quarter. So that's at 10:30. 1030. So we're going to draw this up. Give me 1 second. Let's get rid of this. We're going to draw up our 1030 candle. So we've got our 730 candle. We'll draw up our 9 candle here. And then we're going to draw up our 1030 candle. And then we're going to draw up our 12 candle. Cool. So again, let's continue. We've got accumulation in quarter 1. Quarter 2, we've got manipulation. Quarter 3, we've got distribution, right? Distribution. The reason why we have distribution, we'll see on a small time frame, but we've got distribution to sell side targets, which rest below here and also below here. And then quarter 4, now remember I said the last quarter in this case, if we're using this structure, can either be a continuation of quarter 3 or it can be a reversal. Is quarter 4 a continuation of this? This has just come down. No. Quarter 4 is actually a reversal back to the upside. So if we have a look at what's happening here, let's just copy this just so we can represent it with visuals. This is how the second phase works. So if we copy what we have here, the first phase is accumulation. The second, we have manipulation. And we'll make this more clear in terms of what we're manipulating to, what targets we're trying to manipulate to. The third phase is distribution. And the fourth phase is X. And in this case, X is a reversal of what happened in this phase. Now, you might be like, well, what are we targeting to this manipulation? Let me go into the daily time frame, and I want to mark out on the daily time frame a swing high that we saw. This swing high, right? And I'm going to mark this out. This is why price manipulated to take out this swing high, right? And then if we go back onto the 5-minute time frame and we extend that across in time and we zoom in, manipulation phase took out this swing high. And then let's zoom in on a smaller time frame to see what happened once we took that out. So have a bit of a look. Right there, we took out this swing high. You can see that. And I'm going to get rid of these colors so it's a bit easier to see and we can talk through it, right? We manipulated, we took out this swing high, and then notice what happens after that. As soon as we tick over into this third quadrant, we've got a market structure shift below this swing low. So that's your market structure shift. You've got a fair value gap here, right there. That price returns into nicely. And then we actually sell off from that. This is pre-market open, rolling from the second manipulation into the third quarter. So that actually was a short position to take on roughly about 9 o'clock, right? This is very perfect delivery, stop loss above this high, targeting this level of sell side, and you would have hit that before market open. Now, even if you didn't take that trade and you're waiting for silver bullet, you know that right now, because of what we've done, we've taken out this daily high and we've already tapped now into this distribution. You're expecting other sell side targets to be taken. You've taken this one, but what about this one? Hasn't been taken yet. What about this one? Hasn't been taken yet. So there still are sell side targets to tackle. And then during silver bullet, you can see there's this bearish fair value gap. All the bodies are respecting it. The only thing the wick is doing here is coming back to this inversion fair value gap, which I'm going to draw in orange. So in terms of silver bullet, there's 10 o'clock, right? You enter a short position, stop loss above this inversion, targeting this level of sell side and this level of sell side. And then again, look what happens as we move from this segment or this quarter to the next quarter. Either after we move from this quarter to the next quarter, we're going to continue lower, or we're going to reverse this pattern and move higher. Now, here's what you have to look at. How do we react after we take sell side? Do we just aggressively keep going down, or do we react to the upside? And in this case, we do react to the upside. So you can see as we're approaching this third quarter, or this last quarter, I should say, in this case, you can see how price is reacting. We've already taken sell side targets. We've shifted market structure, like we've shifted above, this swing high here, and we've shifted again. And we're looking like we want to take our buy side targets. Now, does that make sense? Yes. And the reason why is because there's two equal highs here, and we know a lot of liquidity rests at these equal highs. So if you miss this trade and you saw this sell side get taken and then a reaction to the upside, your next thought process could be, okay, maybe in this last quarter, this last phase, we might be targeting this equal high buy side because there's a lot of liquidity resting above that. And what do you know? We return to this bullish fair value gap here and we push higher. And from that point, we just continue to the upside. There's also this one here too, which we tap into, which actually is in a better range. Stop loss could be below these lows, targeting that high. And then when the process continues on. So it's very interesting how this works. And the way you use this, or the way I like to use this, and I've started to use this, is by actually looking at each of these quarters, right? Having an idea of what you want price to do, like anticipating what you want price to do. And then from that, being able to execute trades with this as an extra confluence. Again, accumulation, manipulation, distribution, continuation. Accumulation, manipulation, distribution, reversal. And obviously here you've got the PM session, which is the last 4 quarters, which you can see that, how they play out. So this session, I know it's a longer video, but it's incorporating both the power of 3 and also the quarterly theory as extra confluences. And all this power of 3 talk occurs on smaller time frames. It's fractal, right? So you, for example, within this quarter where you have the distribution, you've also got this accumulation here. You've also got this manipulation to the downside to take out that sell side target. And then you've also got a distribution here to take out the equal highs. So the power of 3 concept is fractal. It occurs in all time frames, even within these quarters, even within these segments. You can see how you can use all these confluences to base a trade on. But I just thought to make a video on that because I think it's an important concept to know, and you can use this to your advantage, you know what I mean? To see how you're reacting and what price is doing. So we marked out midnight open price here. One last thing I'll say is that when you have red folder news events, I like to mark out the 8:30 news candle, the open of that price, because that can be used as like an open, right? And here's the 8:30 news candle, and I'm going to draw that across. I'm going to do exactly the same that we did last time. I'm going to make that maybe like this color, and I'll put some text. And what I'll call this is 8:30 a.m. open, because obviously we know news manipulates price. And in this case, that news candle actually was the one that took out this daily high, which actually sets up the tone for a short position, right? So here you've got the 8:30 a.m. open, and what do you know? We come below 8:30 a.m. open. We've got the mini power 3 playing out. We raid this sell side. We have a shift in market structure. So taking a long position below or close to this opening price is great. Similar in this case, midnight open. Taking a long position from below or close to this price is a good idea, and that's what ICT talks about. So this video is blended together quite a few concepts. It's one of my longer videos, but I think it's an important concept to touch on, and it's a good idea to actually, just to test out, back test it yourself, see how it works. It's not always going to be this clear, but when you have these clear accumulation manipulation periods, it really allows you to set the tone. Really allows you to set the tone in terms of what you want to do and how you can actually frame trade. So hope that helps. If you've got any questions, feel free to leave them in the comments below.